Hello everyone, my name is André Cardoso. Thank you very much for being here. I want to share some of the charts that I'm looking for this week. I shared with you already the euro versus the yen, the opportunity to go long and to try to target our the default expectation for the pattern, which requires 50% of 50% retracement from the weekly fractal above to the most recent lows. So we are already positioned on that trade, but I want also to share with you all the other pairs that I'm looking for, and if you have some questions, then later we can discuss some of those charts that I will show you now. So I will not push all the trades and all the setups that I will see inside the market. Sometimes I think it's not the best opportunity to get involved for some reason, and I prefer to stay away. But if you see something that calls your attention and that you really want to get involved and to participate, we can talk about that specific pattern, and I will try to give you my suggestion and my opinion about how to embrace and how to get involved with that setup, considering the strategy that I'm using to trade those patterns. So again, I will show you a lot of those patterns. If you have questions regarding those, you just need to contact me directly on Telegram, and we will discuss that particular chart. So this is the euro versus yen. Nothing to tell about, nothing to talk about at this point. We are already positioned, and we are expecting our default target at 50% Fibonacci retracement level. So let's wait and see what the market will offer us. The cable, those who have shorted the cable from above, so the market has completed this major bearish bat pattern. We have shorted that pattern, and the market has already achieved the default target. So at this point we should put our stops at break even and close it half of our initial position size. So that's my suggestion. So break even after closing half of your initial position size, and if the market decides to target the second target below, so that suggests a visit to this weekly fractal support 122.02. So if the market decides to sink into those levels, we will trail the position below. If the market decides to keep trading even lower, we will try to activate a trailing stop, and we will try to manage that position accordingly. At this point, we have nice bullish divergence between those lows. I will not be surprised to see there's only two options, obviously. One, a breakout above, or a sink below. A sink below, it may offer us one third drive, and if form the divergence, that may also offer an opportunity to go long, so that will complete the sequence, that will complete the pattern. Eventually, if the pattern gets completed at the 224% Fibonacci extension, which is an extension of this very last swing high, even better. It will complete in a very strong Fibonacci pressure level, so we will take that in consideration. So let's stay tuned on that possibility, the eventual fall and the completion of a third drive, which will offer then later, which should offer a bounce and a retest of the highs of the pattern. So basically we will see, if that pattern gets formed, we may see the formation, then the retest of this daily fractal resistance above. Obviously, we are not sure if that will happen. We are now threatening the 200 moving average and also forming one potential trend line resistance. So basically this is a parallel from this trend line support projected above. So basically we see the market respecting this structure. If the market decides to sink into those levels, we will see if that will happen, but a breakout above this structure and the formation of the shark pattern above, it's also the other well, as I said, there's only two options, to trade below or to trade above, but we need to wait for something to form above the golden Fibonacci extension that may put some pressure and the completion of the shark pattern above, or below the completion of the formation of a third drive, a three drives pattern, which may also offer an opportunity to go long. So for now, I'm just holding those shorts from above and nothing more. Euro versus dollar, I shared these as a potential heads and shoulders. The market ends up breaking below that daily fractal support, so the market has already a new support below. Potential false breakout below the previous lows, eventually push to the golden Fibonacci extension, previous structure lows, so previous structure support levels, 117.33, the golden Fibonacci extension level. But since we are trading inside this major channel, this major descending channel, I will not be surprised obviously to see a price extending to the 224 and eventually a reinforcement of this trend line. Be careful, because a breakout above the trend line may offer more upside momentum. We have also the daily fractal above, but in terms of harmonics and in terms of patterns, let's wait to see what the market will print for us. But one eventual retest of this trend line resistance will not be a surprise. Below, and because we have also that those daily, let me delete this one just to not confuse people, but this bearish pattern also with default targets at the monthly fractal, so that pattern should target the previous structure resistance. So we are far away from those levels, so don't be surprised to see more downside momentum for euro versus dollar. We are also trading just a few points above that golden Fibonacci extension level, so which is nothing more than, again, an extension of the very last swing high. You need to find the bottom of the first or the previous lows before the formation of the higher high, and extend this swing below. So basically we want to take a Fibonacci extension and extend the highs to the previous structure lows and try to identify that golden Fibonacci extension level, okay? That usually will offer some pressure, and we can see the price approaching that level and starting to feel that pressure. We never know if the price will actually trade those levels, but as soon as the price starts to approach the golden Fibs retracement and extension levels, the market tends to react, or at least even if limited, the market tends to react. So what I'm expecting at this point for euro versus dollar, eventually the reinforcement of a trend line resistance of this channel, and that may offer more downside momentum or a new opportunity to go short. I believe on a retest of this monthly fractal. Let's wait if that will happen or not. And this is also the default target for the heads and shoulders printed above 115.18, so that is the default target. 114.96 monthly fractal support, and just a few points below the 38% Fibonacci retracement from the monthly fractal to the weekly resistance. So this retracement, this default target for that daily pattern that I showed you before. The Australian dollar, also let me go into a daily first. We have also the 38% Fibonacci retracement for this major alt-bat pattern printed above. We have already, as you can see, the market is already monthly fractal resistance. The market has found some pressure there. Okay, let's see how the market will react. A full recover for the Aussie will probably put the price trading even higher if the market then later decides to break above, but eventually the full recover, there's only one option, one false breakout above, and we can try to identify the false breakout above if that happens, and a V shape and a double top, but we still need to see the price rejecting to break above this previous structure, higher highs and higher closes. Well, that can also happen from here, but let's wait. For now, let's wait. We have that alt-bat pattern, and we have the default targets for that pattern at 38% fib. Let's wait if that will happen. Just because we have other patterns printed in the middle of that process, it doesn't mean the market will not sink even further later. What we have at this point, I projected this bullish butterfly pattern at 127 extension, and then when I started to see the price falling below those levels and always respecting the possibility for the 141% Fibonacci extension to put some pressure also, so not only the default completion point, the 127% Fibonacci, I always like to consider a push a few points below, so 141% fib, and then if extended to the 161.8 extension, the shark pattern, the crab pattern extended to the 161. So as you can see, false breakout below, projected above, as always, an extension of the very last swing low, projected above, golden Fibonacci extension right there. Let me put this price here. So this is not one of the situations that I prefer to engage the market. In this case, I prefer, as I said, on euro versus dollar. In this case, I will prefer a push to the daily fractal support. I prefer to short if the market decides to reject these lows. If the price decides to approach this golden Fibonacci extension and then starts to fall, I will lose this opportunity, because it will not offer me a decent risk-reward approach. Because if I need to put my stops above my entry, I will put my stops very close to the second level, to the 224% Fibonacci extension. So basically, it will force me to put my stops above the 224, and I will not engage a friendly situation anymore. So basically, I need to put my stops above the 224% Fibonacci extension, and there's the 200 moving average approaching from above also as an element of pressure, or potential pressure. So I prefer to wait for a retest of the daily fractal. Eventually that will offer me a better and friendly risk-reward approach. I will target the 50% Fibonacci retracement if that happens. So if the market decides to trade at 71.92, I will see the market then later forcing or retesting the previous structure resistance level, and it makes more sense than shorting the market from the golden Fibonacci here. Okay, so that being said, Australian dollar also now trading above the most recent fractal resistance, approaching the golden Fibonacci extension right there at 71.36, and the 224% Fibonacci positioned right below the daily fractal support, which may act as resistance. since it's broken already. 71, 87, 224% Fibonacci extension for the Aussie. The Kiwi, let's move further. Time passes. The Kiwi has found, even if limited and we don't know about, I believe this is just part of a correction at this point. I believe there's more downside momentum for the Kiwi. Let me try to project this for now as one eventual parallel structure. So I believe this makes parts of a correction, and I believe the market will print new lows. But what we see here is a bullish shark pattern, 224% fib, and then the correction has started. The default target for the shark pattern will target the 50% Fibonacci retracement. As always, it's positioned at 66.54, and that may form the right shoulder, or a major right shoulder. That's why I think the market, that's why I think there's conditions for the market to sink even further or even lower. On a higher time frame, there's also the 88% fib, so the market has found resistance between the default bearish bat pattern completed there at 88% fib, and then the 113% Fibonacci as an alt bat pattern completion points. As you can see, the market has found resistance between these let's call it the box for the bat pattern, no? Between the bat pattern default completion point and the alternate bat pattern, which I suggest to have in consideration as always. Once you trade the bearish bat pattern, we should always take in consideration the 113% fib, because the market can try to hunt those stops positioned right above, and sometimes I try to put my stops right above because I see something printed below the structure, and I will try to let's say on a lower time frame I see a breakout of a structure, and I will try to engage that structure, and that will force me to use tiny stop losses, and sometimes that will put my stops very close to the starting point of the pattern, and honestly most of the time that will happen, that I put my stops very close to those starting points. The market ends up hunting me. It's very rare to get some profits from there, and that's one of the things that we are always trying to improve our trading strategies, and that's one thing that I need to avoid to do when I'm trying to engage a major pattern with a lower time frame event. So let's say a flag or a triangle, and I will try to short that triangle and try to take advantage then later of this major bearish bat pattern. So let's try to commit those errors, if we can call them like that. So that being said, no tiny stops, and the market has found some resistance right there between the 113% Fibonacci extension and the 88% fib, and it's now forming what I can see as a potential next zone, and the eventual right shoulder above. Let's see how the market will behave. We are also we are threatening the most recent weekly, the most recent 4 hours fractal resistance printed there. As you can see, the Kiwi finding some pressure at the previous fractal. So that's what I see. I see more bearish momentum for the Kiwi, and honestly at this point we don't have a decent projection. I can say kind of a symmetrical pattern, a few points above the fractal. 38% fib may offer some pressure also. that fib position at 66.21. It's possible. Well, what I know about those patterns, that shark pattern, if the price decides to achieve the default target for that pattern, we will see this as a bearish 5-0 sequence, and that's short opportunity. So basically, that's the market will complete. If the market decides to trade the 50% fib, this will be our bearish 5-0, the bearish 5-0 sequence, and we can, well, we expect. I'm not saying it will happen, but we expect some more bearish momentum if the price decides to form this bearish 5-0 sequence. So let's wait and see. 66.54, the 200 moving average also approaching from above. Let's see what will happen. But again, bullish shark pattern. If at default targets, that will print the bearish 5-0 sequence that may offer more pressure for the Kiwi. So I remain my main bearish bias for the Kiwi. This is Australian dollar versus the New Zealand. Another one that I shared before, 224% Fibonacci extension reached there, technical double top right there, a breakout and a fall below. So I'm expecting at this point a reinforcement of a potential trendline resistance above. We have bullish divergence between those lows, between those previous, the most recent lows and the previous structure support level. So eventually this is just an ABC correction after the previous swing high. So I will not be surprised to see a violation of this structure and eventually a violation of the monthly fractal again for the Australian dollar versus the New Zealand after this short for this shark pattern. Then if that fails, and because that can fail, the full recovery for the pair, we should pay attention to the one approach to the weekly fractal support, basically. So, but one bullish bat pattern, it's now projected at 106.20 and at 88% Fibonacci retracement levels. So basically, if the price decides to reject these resistance levels and falling directly into those into this Fibonacci level there, that will complete the bullish bat pattern, but it needs to happen without violating those previous highs. So if the market decides to trade higher, that will start to fade with the possibility to form that pattern there. Dollar versus CHF. We have entered long on this trade, and we have already achieved our default targets for the pattern. I shared this as a technical double bottom at some point after the completion of this alt bat pattern. The market has entered in this sideways moving process and consolidation. A technical double bottom was formed there, a violation of that structure, confirming of the next zone, confirming the technical double bottom as a potential reversal behavior, and we just waited for the retracement to the golden Fibonacci level. So that was the formation of the bullish 2618 trade setup, and that offers a nice opportunity to go long. So we have already achieved our default targets. I will not be surprised to see a retracement from here. We have also this crab pattern printed at 1628 extension, 92.93. So basically I will not be surprised to see a retracement back to the monthly fractal support. Let's wait for that to happen. And again, actually this is a crab pattern. It's not a shark pattern, but let me correct this. I need these fibs at 38% fib, so those may act as support levels. So basically the daily fractal resistance should be retested with the 200 moving average also approaching from below, which may put some pressure if the price approaches those levels. So dollar versus CHF also in a retracement for now. The Canadian dollar heads and shoulders, or inverted heads and shoulders, as I shared before, and we are now facing also a technical level top. So breaking below 133.36 will, or basically below the fractal support, may trigger more downside momentum and eventually the retest of the previous structure trend line, or the next zone. Let's call it an horizontal, not an horizontal, but an ascending next zone, and the structure trend line resistance. So basically the 200% Fibonacci extension as a default target for the pattern. Is a small short there below this next zone, and that may also offer some pressure if the price decides to approach these levels, the next zone again for the dollar versus Canadian. Dollar versus NOK, I shared these crab patterns printed at 168 extension, 181.66. The market then later has formed these kind of inverted head and shoulders, very similar to other dollar pairs or dollar related pairs, and with this wedge formation here, and we are trading above it. So basically we have also a bearish shark pattern at 224% Fibonacci extension, so I'm expecting a retracement for the dollar versus the Norwegian krone. This one should target the 50% fib, but let's pay attention to the 38% above the daily fractal, or let's pay attention to that fractal, in fact 9.18.13. If that happens, that will form, as I said before, and I shared it on my previous chart, that will form the bullish 5-0 sequence if the market touches the 50% Fibonacci retracement. So that means a bullish sequence. If then, we don't know if that will happen, but if, then we will think about it. Another one on a higher time frame, 4 hours time frame, bullish shark pattern, 161.8 extension, an extension of the very last swing high, projected below, nice pressure there, 224% Fibonacci, 127% Fibonacci extension, I'm sorry. The bullish butterfly pattern, this blue butterfly pattern there, some confluence between those both of the patterns, and a new daily fractal right below the completion point of the patterns, triggering the most recent attempt of recovery. But then but now we have already a daily fractal printed above. No specific pattern printed here. Let's wait and see what the market will form, one eventual triangle at some point. Let's wait and see. We need to wait for the price. We need to wait for further developments for the Mexican peso. But nice reaction from those levels also. Dollar versus the yen. Nice sequence of patterns for dollar versus yen. We have the most recent one, the 161.8 extension, the bullish crab pattern, pushed a few points below with the daily fractal below the completion point also, and then the recovery of the dollar versus the yen. We are now trading inside one, let's call it a megaphone formation, kind of a wedge. Well, below the most recent fractal support, that we admit the 50% Fibonacci retracement to be reshaped. So actually I need to adjust that to the most recent highs. So if the market decides to fall into the 50% Fibonacci retracement level, but at this point I'm not so sure. I believe the market can actually trade higher for dollar with dollar versus the yen, and eventually a retest of the daily fractal above. But let's wait and see. Nothing specific more inside this structure. We need to wait for further developments also for the dollar versus the yen. But nice reaction from the bottom, and I was expecting obviously the reactions from the 224% Fibonacci extension level. So I admit, if the price decides to violate this structure, I admit more downside momentum. The same way, with a small adjustment at this point, the same way I admit the possibility of a breakout above and trading higher above that structure. So if the price decides to fail one immediate, specifically from the 224% Fibonacci extension, and actually the 161.8, also we expect fast reactions as soon as the market touches those levels. If the market fails and it starts to move sideways, eventually it's time to move on and to jump out of the trade as soon as possible. If you have engaged those ones. Euro versus yen, as I told you before, more upside momentum is expected based on the pattern completed below. Pound versus the yen, I shared with you the possibility to form these patterns below. We are far away from those levels, as you can see. Well, basically the market has found some support at the 50% Fibonacci retracement, 133.38. So I shared this chart when we were trading at 38% Fibonacci retracement level. So we were trading at that level, and I show you the potential for pressure, and because we were trading the 200 moving average, as we can see, we have recovered again into the 200 moving average, now acting as a potential element of resistance. So we are trading below that 200 moving average. So the recovery of that moving average may trigger more upside momentum. But again, let's wait and see. We have also bullish hidden divergence between those lows, and that's one of the motives and one of the reasons why the market has bounced from this previous structure support level. Actually, the weekly fractal support was formed at those lows, and we have a daily fractal printing new lows on RSI, with the price rejecting to trade below those lows. So basically that's a sign of bullish hidden divergence, which suggests more upside momentum for the pair from those levels. So 50% Fibonacci retracement. Let's wait. Eventually more upside momentum for the cable, for the pound versus the yen. Let's wait and see. But nothing specific in terms of patterns, unless if the price decides to fall directly to the monthly fractal support below. Australian dollar versus the yen, a lower time frame event. I was expecting the formation of that shark, of that crab pattern projected before to 168 extension. As you can see, the market has failed the completion point just by a few points, and we need to adjust this potential retracement to the 38% fib, just a few points above the weekly fractal. So, but the pattern was already suggesting, or the potential formation of the pattern suggesting the retest of the weekly fractal support above. So eventually that's what the price is trying to do now. It will try to retest that previous structure support level. The New Zealand versus the Kiwi, another one with the deep crab printed at 160 on 8 extension, pushed a few points below. We are already trading the 38% Fibonacci. As you can see, the market has already achieved the default expectation for that crab pattern, 69.62, and that's what we have at this point. Nothing specific. We're still trading inside this channel, this shining channel. We need to wait for more of those. The Canadian dollar versus the yen, also shared with you on my previous videos, actually all of them, projected at the 1618 extension. The market is now trading inside this actually is moving sideways inside this corrective structure. I believe a breakout above will put the price trading the default target or the default expectation at 38% Fibonacci. Retracement level 79.659, so that is the default target for that pattern. There's also a technical double bottom, so which means above that the most recent resistance will trigger that technical double bottom, which implies more upside momentum, obviously. So let's wait and see what will happen for the Canadian dollar. Euro versus the pound, almost a symmetrical pattern there. I was projecting that pattern inside this actually at 150% Fibonacci extension from this this internal extension. So this is an internal extension of this swing high, so between the daily fractal support and the daily fractal resistance, so projected below 150% Fibonacci extension. I always search for confluence between, or a cluster box between that extension from this internal swing and the default external swing. So the first swing projected here as a default extensions projected below, and then the internal extension, and I will try to search for confluence between those zones, but also with a major retracement Fibonacci levels there. So basically I will search for a confluence zone between a clustered box between those fibs. What we see is the golden Fibonacci retracement level at confluence with the 127% fib, well, and the bounce for the pair from these levels. We have also bullish divergence between those lows, which means we may be facing one ABC correction, and we should expect more upside momentum for the pair. So stay tuned. The breakout above that monthly fractal resistance should trigger more upside momentum, and we will wait for something, eventually a retest or a double bottom or a pattern then printed below. We can think on something like a shark pattern to try to engage that. If that will happen or not, we don't know, but we can try to search for something like that in order to take advantage from the next swing. But let's wait and see. And obviously, as I said before, a direct breakout above this structure and a retest of that structure may offer also another opportunity to go long. What I'm saying is one immediate breakout of the structure and a retest of that same previous structure resistance trend line, which will be transformed into a support, that may offer an opportunity to go long if the price decides to reject again the monthly fractal. So basically we wait for the breakout, and you need to wait for a retest. If the market decides to fail a retest and go directly into the previous structure highs, you need to ignore that. We don't know where, because as soon as you enter the market will start to sink. We need to wait for a breakout above, and we need to wait for a retest and a rejection of the monthly fractal and the structure trend line. Two options: the diagonal or the descending trend line retested, or the horizontal resistance retested also and rejected later. That's what I suggest. So at this point, nothing specific, unless the price keeps trading lower, and if that happens, we will pay attention to the bullish pattern below, but we are too far away from those levels. Let's see. But if that happens, I will pay attention to those levels. Actually, I will put an alert. I will put an alert there, and as soon as the price approaches those levels, I will be notified from by TradingView, and I will make the plan for that if that happens. Euro versus the Australian dollar. We were trading that golden Fibonacci extension as a potential bearish shark pattern. I put there the 88% Fibonacci extension because if you notice, the price has rejected to close below the previous lower lows, which can change the variables in order to identify the next pattern there. So we can see this as a potential bearish bat pattern because the price has decided to reject to trade or to close below the previous lower low. So this is actually a bearish bat pattern. But in fact, we have a new fractal there. So we have a daily in the weekly fractal below the previous structural lows. So there was a clear and intentional new lower low. So a false breakout below the previous lows, extended above 161, confluence between both of those levels, a few points above the 113% Fibonacci extension. As I said before, I always like to take that in consideration. And well, basically we have a box between the 224, the shark pattern completion points between the 161 and 224, and then the range between the 88 and the 113 for the bearish bat patterns. Not the most friendly situations to push a trade, because you never know, okay, I will short the 88, I will short the 161, or I will wait for the 113 or the 224. Not easy to make your choices at this point in this setup. The only thing that can help us is this potential trend line resistance. So as soon as the price touches that level, after completing that pattern, you can try to participate and to get involved. But as I said, not a friendly situation, because you are divided between two different behaviors, and you don't know where. Well, I prefer to short now. I prefer to short above. So as we can see, the price has violated this potential trend line resistance. It has printed a new fractal above, and later it has decided to into more downside momentum. So we are now into this retracement. So we are approaching the default. If we need a default target for the fall after the market finds this daily fractal, if we need a retracement or a target zone, I will put my target at 64.12, 38% Fibonacci retracement. Ultimately, the 50% Fibonacci extension level also as a potential pressure zone. Right there, previous structure resistance, 50% Fib. Let's see, and eventually the market will not touch any of those. So, but let's stay tuned on that possibility. So if I need a default target for that potential short side pattern, so I will put my targets there. Euro versus the New Zealand, I shared this as a potential bullish shark pattern, 224. The price has failed just by a few points. Another one just with an intention but without completing the pattern, and then a fast recover to the 224%. Again, false breakout below, very last swing low, projected above 161, ignored, 224% Fibonacci achieved, a few points above new fractals, 38% Fibonacci already achieved. As I told you before, I always like to take that level in consideration, and the 50% Fibonacci as a default target, a few points below. I'm not saying the price will target that level or not. There's room for that to happen, but let's wait and see. Nothing specific for the pair at this point. The pound versus the Australian dollar, I started to see this as a potential third drive also. As soon as the market prints this new high above the completion point, above the 88% fib, I said to myself, okay, eventually they will print a new higher high, and eventually I'm seeing this as a potential third drive. So one first drive there, the retracement, second drive, and I was seeing this as a potential third drive, but as you can see, the market is already trading lower. So a few points above the completion point of the bearish pattern, the market has found some pressure and some resistance, and we need to adjust those potential target zones. I will remove this golden Fibonacci for now, which is one of the possibilities. The very last swing high projected below, and let's search for that golden Fibonacci extension, 161.8 extension right there. So I will not be surprised to see another pattern then later printed very close to the daily fractal. Let's wait for that to happen, something like that. The bullish shark pattern at the daily fractal resistance, which may act as a support, obviously. Okay, more pounds versus the New Zealand. I was thinking exactly the same, and eventually this one may act as, actually may form that third drive also. We are now approaching the bottom of the potential ascending structure. Eventually we can make some adjustments here, but a third drive will not be a surprise. We have one first reaction from the golden Fibonacci extension and the fall, and then eventually to targeting these 224% Fibonacci extension. Eventually we will see that third drive at confluence with the golden Fibonacci extension, but also with one descending trend line, one major descending trend line. Note this may act as a potential major head and shoulders. So, but we will talk about that later. As we can see, for now we are threatening that potential trend line support. If the market starts to bounce from here, I will not be surprised to see that shark pattern printed there, and that's one of the trade setups that we should pay attention for. The eventual retest of this trend line resistance, the formation, giving sequence to the formation of this right shoulder, and eventually we will try to maximize our profits above or below the next zone later, if the price allows us to manage our position accordingly. But one of the trades that I'm waiting for, it's exactly that one eventually third drive completing a sharp pattern above a 224% fib, and then we will target the 50%, and then we will maximize our profits if the price decides to fall below that major next zone for the heads and shoulders. So the pound versus the New Zealand, stay tuned on that. Now let's jump into the Dixie, gold, oil, and those commodity and those cryptocurrencies. So I shared with you on my previous video the potential for the inverted head and shoulders. I shared also the potential for a reversal extension to put some pressure at 94.54 and 224% Fibonacci extension also from this very last swing low right there. So some confluence there between fractals, between price structure, and as we can see, the market has started to retrace from there. So the 1628 extension completing this bearish shark pattern, and we wait for the retracement as always to the 50% fib, the 50% Fibonacci retracement level. So I will give you the price here, 93.25, without ignoring obviously a few points above 93.60, the 38% fib default. Actually 1628 extension of the very last swing high, it's now projected at 93.85, so this may act as a potential pressure zone for the Dixie. And obviously the next one at 224, 93.50, so that will that may put the price reinforcing these ascending trend line support. But for now we are approaching the golden Fibonacci extension, a minor bullish shark pattern. Again, this is a 2 hours, 1 hour time frame event if you wish. So we are now approaching that potential pressure Fibonacci extension zone. Let's stay tuned on that. Again, 224, very similar with euro dollar obviously, but reversed or inverted. Very similar with the euro versus dollar. I prefer to wait for Dixie to trade at those levels and eventually reinforcing this trend line support level. Next, the gold. I shared this as also another parallel trend line support. So the market has started to bounce from this structure support level. I admit more upside momentum above this daily fractal, but the ratios don't lie, and what we are seeing here is nothing more than a bounce from the 127 extension of the very first swing low, and a bounce after completing this sequence. So I admit the formation of this bearish cipher pattern at some point in 1948. If the market decides to trade even higher, at some point we will trade those levels, and if that happens, we may see a retracement. We may see a retracement back to those 38% Fibonacci retracement levels. So basically back to 1910. I will not be surprised to see that happening, and if that ends up being what the market will print for us, and again, this is pure speculation. I don't know if the market will trade those levels. I can expect a bounce from this structure support. I can expect a bounce from this 127 extension after a very fast and clear 3-wave structure. I admit that possibility, but I don't know if that will happen. But what I know is that if that happens, we may see that cipher pattern printed at 78% fib, and if the market decides to fall into those default expectations for the cipher, we may see the formation of a right shoulder right there. So, and this may act as a potential inverted edge and shoulders. And again, this is too soon to predict, and it's too soon to say, okay, eventually that's the point, a bearish cipher pattern that may force a retracement there, which is truth. We assume after the bearish cipher gets completed, we assume the market needs to retrace. Even if limited, we assume the market needs to retrace. We never assume the market will offer me 500 or 200 points For a trader, I'm expecting just a couple of them, you know, but we assume the market will fall from the 78% fib if it completes the cipher pattern. And if that happens, we may see the formation of one inverted edge and shoulders, and eventually these lows there, this is the head of the inverted edge and shoulders. And if that happens, if that happens, we will see an extension, and that will depend on the formation of the next zone, but that will depend actually where the next zone will be reinforced. But assuming a 200% Fibonacci extension of what we have at this point, we will see gold trading above the weekly fractal. So basically, the formation of a next zone may put the price trading above the weekly fractal. This will be the inverted head and shoulders. No. Again, it's too soon to predict. It's too soon to say, okay, the market will print a cipher and then. But what I'm expecting at this point, and based on the default criteria that the market, or based on the criteria that the market is presenting at this point, and the Fibonacci variables, I will not be surprised to see a bounce on gold into this trend line resistance, some pressure there, and a retracement based on the default expectations for the cipher pattern, and that may form one right shoulder. If that happens, we already know where to position ourselves above our daily fractal. That may trigger more upside momentum, or at least a retest of the previous structure highs. So let's say I'm waiting for that cipher, eventually to get some shorts there, and then I will wait for that right shoulder to be formed. Silver, much clearer than gold, has completed a bullish shark pattern at 224% Fibonacci extension. Actually, it has been pushed to that Fibonacci level. After this sideways moving process, I started to think, oh, the market that will vanish with that pattern, because we need clear movements between those variables. But what is true? It's I projected the pattern at 224% fib at some point. Then when the price starts to trade sideways, I simply ignored that pattern. What it's true, it's the market has found some pressure after crossing those levels. So we have a new daily fractal just a few points below, and we have the most recent fractal support actually rejecting that Fibonacci extension level, and we are now being pushed above. Silver will complete, or it may complete a bearish 5-0 sequence. Okay. 50% Fibonacci retracement as a default target for the bullish shark, and that may offer more downside momentum. Even if limited, it may offer more downside momentum, and we will see what patterns the market will print or will suggest as soon as we approach those levels. Let's see on which conditions we will approach those levels. Let's see. But for now, we have this bullish shark pattern for silver, and the 38% Fibonacci approaching from above, I actually positioned it above, and with the 200 moving average also approaching from above. Crude oil. Now trading the actually moving sideways inside this range between the most recent fractal support and resistance levels, but we are trading this range. Nothing very specific for now. We need to wait for a violation of the structure in order to project patterns above or below. I admit the possibility, as you can see, I admit the possibility for more upside momentum, but for that to happen we need to vanish with that daily fractal resistance above, and projected above we have a crab pattern at the weekly fractal, or approaching the weekly fractal resistance there, and below I need to wait for the default bullish bat and alt bat pattern. So those major bullish bat pattern below, and extended at 113, a false breakout below the previous daily fractal, the alt bat pattern right there. So below I will wait for those patterns to be formed, and above I will wait for the crab pattern there. SPX, another one, golden Fibonacci extension, pressure level, bullish shark pattern 32, 33. I shared these on my previous video with you, so that was the bounce the market has produced for that shark pattern, and then reinforced it again as a potential double bottom. We are now trading above the next zone, and with patterns projected above. So bearish shark pattern at 34.07 and 34.83. So this is a one that I prefer to short from the golden Fibonacci extension if the price decides to approach those levels. Any of you who feel interest on trading that one, please let me know. I will try to push, actually I will push that one on Telegram. And obviously if you prefer to wait for an extension above, you can always wait for 34.83. I prefer the 168 extension because we have a daily fractal. This is actually the monthly fractal resistance. So I admit another retest of that fractal and then a fall from those levels. And if that happens, I will see, as I said before, 50% Fibonacci retracement as a default target, 38% Fibonacci right there. So I admit a fall from that golden Fibonacci extension, and let's wait and see. DAX, very similar, now trading above the most recent fractal resistance level, with sharks projected above, very similar to the S&P, 13,127 projected, 161 extension projected at 13,127, 224% Fibonacci extension, 13,430, one approach to the weekly fractal. This one, taking in consideration obviously the one potential trend line resistance approaching from above. If that happens, the formation of the shark pattern at 161 may offer some pressure, and that's another one that I will search for if that happens. Actually, I forgot to put my alert for the S&P, and I will put my alert a few points below the monthly fractal, and that's it. So the DAX also approaching one potential golden Fibonacci extension as the bearish shark pattern completion point. Now, some of you have no interest on bunds and bonds, so I used to cover those pairs just for the Forex Analytics community, so I used to share my views on them, on those. So if you have some interest on those bunds and bonds, so this is a 10 years, and we are moving nowhere. We are moving sideways inside this range between those daily fractals. We need a clear decision, or above or below those fractals. I see this as a potential edge and shoulders, or an inverted edge and shoulders formation. So that being said, trading above that weekly or eventually the daily fractal, a violation of the daily fractal, it will trigger more upside momentum. And obviously below the structure, this ascending trend line support, and below that daily fractal may trigger more downside momentum. So there are patterns projected above, but we still need to wait for a breakout above the structure in order to that, and that will increase the possibility to form those patterns which are not granted. The Bund, it has formed the 88%, the bearish pattern at 88% Fibonacci extension. It has started to fall into the 38% fib, so default target reached there. Few points above the 50% fib, new fractal support, the weekly fractal support level, and very similar with the 10 years. Also moving sideways inside this ascending channel. And well, we expect we need to wait for a violation of the structure, but for now there's nothing that calls my attention for Bund and the 10 years at this point. And I need to go into a higher time frame when I talk about Bitcoin and Ethereum. I'm going into a 12 hours time frame, and my picture it's very simple. I see this as a potential heads and shoulders, of course, potential is not granted because you need validation, and weekly fractal support 98.25. So this is the validation point for one inverted for the heads and shoulders, not the inverted heads and shoulders. I'm sorry. So this it makes this left shoulder, and we are eventually forming the right shoulder. So it's not granted. Eventually, the market will ignore that. There is also the potential bearish bat pattern at 12, 16, or above those levels, or very very close to the weekly fractal printed above, and there's also a bearish shark pattern projected at 1457. So basically a lot of things can happen at this point, but I see this as a potential heads and shoulders. And one thing that we know is that a violation below the next zone may offer downside momentum, and if that happens, we will see we may see eventually the Bitcoin trading back to 7950s, or very close to those levels again. So that's potential heads and shoulders for the Bitcoin. And Ethereum, with the golden Fibonacci extension there putting some pressure, but it's not the pattern that I want to show you at this point. Again, eventual bearish bat pattern already projected above. Eventual bearish bat pattern projected at 468, but we have the most recent support levels very close to the golden Fibonacci level. So basically, a new low below the previous lows will put the price trading the bullish shark patterns, and again, the 224% Fibonacci extension, previous structural lows, that can also happens. A direct fall into those levels. Monthly fractal resistance as potential support right below the golden Fibonacci extension. So let's wait and see how the market will react here as soon as it approaches the monthly fractal resistance level, which is now, as I said before, which is now potential support level. So that completes my insights for this week. If you have, as I said before, if you have interest on any other setups that I show you here, please just let me know. I will try to offer you my opinion, and my suggestion regarding the risk that we should embrace, or where the patterns will invalidate. It's very important because it allows us to manage the initial position size and the initial risk that we want to embrace in that specific setup. So, but that being said, if you have interest on any other pattern, just let me know, and I will try to give my best um, with my opinion regarding that pattern. So I hope you enjoyed that video. I will keep this model. I will keep sending you some shots and some videos related to some of those patterns. Obviously this takes almost more than 1 hour already. 1 hour and 10 minutes already have passed. I will try to make some short movies, just covering a few pairs, but this one was a specific one. Sorry, because I want to give you the full picture that I'm seeing at this point inside the market. So that being said, I hope you enjoyed. If you have some questions and some if you want to discuss some of those charts with me, please feel free to contact me directly through Telegram with a direct message, and I will be there for you, and we will discuss those charts together. Stay well, have a nice week, stay safe, and safe trades also. All the best for you and for your families, and have a nice trades.